Good morning. My name is Drew Moore, and I've got our regular guest in here with Michael Reginelli, one of our commercial brokers for advanced trading, and our economist, Brian Basting, and we're going to hash out the April USDA report that was just released here moments ago. So as of right now, corn's down about 4 cents here in the nearby end. New crop, soybeans are up 9 cents, and then wheat is about unchanged here in the Chicago contract. So let's get into it. Brian, what did the report really have to say on the grain side of the ledger here today?
Start out on the U.S. balance sheet, Drew. We're looking at no change in the carryout from last month. Basically, the USDA made minor adjustments in imports and a little bit of food use, but no change in feed or exports. So basically, USDA is status quo for this month. Okay. I would say, though, they made some important changes, Drew, on the world scene. They increased Ukraine exports from last month 2 million tons, and they increased Russian exports of corn 800,000 tons. So between those two, nearly 3 million tons. So the export competition looks like it's going to remain keen this last half of the crop year for corn. Big wild card there, of course, will be what will China do? Will they make another run at more export sales, or have they completed their last round here? I would say other than that, we're looking at the wheat side. Again, more competition, Drew. Increase the Russian exports, 1.5 million tons this month. Ukraine wheat exports 1 million tons, both old crop. So we've only got a few months left in the crop year here, but it looks like exports from the Black Sea will continue, at least the USDA believes, all the way through the end of May. So no changes in the U.S. balance sheet except for feed residual was reduced by 30 million bushel. That was a reflection of the recent stocks report, higher than expected stocks of spring wheat in the northern plains. So 598 is the carryout for U.S. wheat, with the biggest adjustment being an increase in spring wheat carryout.
Perfect. Thank you, Brian. Michael, what about domestically across the soy complex?
This is the quintessential kicking the ball down the road. There's not a whole lot to talk about domestically on the soy complex. They didn't make a single adjustment to the U.S. balance sheets on beans here. They left the carryout unchanged from last month at 210 million bushels. The trade was looking for something a little tighter than that. I think 198 was the average guess. Range was big, 170 to 225, but nothing, no changes to production, no changes to demand, no changes basically anywhere to be found. Would note, Brian and the ATI research team here are using a slightly lower export number than the USDA is currently. Our carryout internally is roughly 70 to 75 million bushels higher than what the USDA came out with today, with the idea that Brazil, as they continue to get more efficient, which we're starting to see signs of right now, will kind of take the lion's share of exports here and carry us through the balance of the year. So on the product side too, zero changes to the soybean oil balance sheet. Meal carryout was unchanged. They did decrease production by 50, but then they raised imports by 50. So it's just a dead wash across the entire bean complex here.
Easy job, copy and paste from last month.
That's right.
Brian, what about the global scene? South America obviously seems to be the driving force for soybeans right now. You're starting to see an uptick in Brazil production from some privates. Can you tell us a little bit more about what the USDA had to say today?
Yeah, USDA did follow suit on that, Drew, in terms of increasing the Brazilian crop to 154. Last month was 153. That crop is about 85% plus harvested now, Drew, and it is definitely working its way into the world pipeline as we speak. We're seeing U.S. soybean export sales drop off tremendously here the last few weeks.
Sure.
Decent liftings still, but once those liftings are done, it looks like we're getting into May, June, July, and August. We will be the definition of residual supplier of beans to the world.
Sure.
One wild card, though, the USDA did lower, as expected, Argentina bean production down to 27 million tons. Last month, Drew, that was 33 million. Some private estimates are as low as 25 still. So how that will affect the imports of Argentina, because it looks like Argentina is going to have to bump up their imports to maintain their crushing capacity here as this crop year begins for them down there. What are the dynamics involved in that? Will we see a continued spike in our export sales of soybean meal here in the U.S.? Something to keep an eye on here.
Sure.
Other than that, though, I'd say that the thing that I remind the viewers is full potential is still intact for Brazil corn. USDA made no change in Brazil corn today at 125, but Drew, the subsoil moisture is near ideal in many states in Brazil, particularly Mato Grosso in the north, and the south now is getting better rainfall here in the near term. So Drew, I got to remind your listeners that as that crop is harvested, if there are no issues the next 60 days between now and the 1st of June, that crop will be a bear in the world pipeline starting about the 1st of August, competing with the U.S. So it's not in the bin yet. A lot can change between now and the 1st of June. But right now, I'd have to remind the viewers, Brazil has full potential for a record corn harvest.
Makes sense. Makes sense. Thank you, Brian. Michael, we talked about this a little bit prior to the taping, but we're in the midst of the gold mineral roll versus the May contract month. You got little over 2 weeks until first notice day. What does the USDA have from an implication standpoint on spreads moving forward, and what are your thoughts on the cash markets here?
Sure. Yeah, I don't think what the USDA did today is going to do really much to change the dynamics for the cash markets and the spreads as far as kind of looking forward here. You mentioned we are in the gold medal roll. We'll be in the roll until Friday. Maybe creating a little bit of weakness, feeling it more so on the bean side than the corn side as far as front end spreads go.
Right.
I guess right now when we kind of take the cash markets into consideration, we're basically kind of looking at that first notice day here later this month to get to May futures. Basis across space, there's some areas of a little bit of weakness, but for the most part, basis is still fairly strong across space, compared to what you call historical values. The pipeline feels relatively tight. USDA reminded us here just when the last time we sat in this room, just under 2 weeks ago, that the farmer stocks on hand are quite a bit larger than they were a year ago, i.e. the farmer owns more relative to the commercial than we would have seen last year. Right. The challenge with that is, as the U.S. weather opens up, it looks like we're going to have a fantastic planting week across the Midwest here. It's a little colder next week, but as farmers are really kind of hyper-focused on getting this crop in the ground and starting to think about planting, that's going to be their focus, probably more so than marketing, unless the market wants to go make new highs here. So I think the pathway for fresh farmer selling and new bushels to be introduced over the next 2 weeks is probably fairly slim, which means that if you're a demand-centric point and you need coverage, it's going to have to come from commercial bushels. Yep. So as we look at kind of the next 2 to 2.5 weeks, that's what it's going to really take to cause meaningful weakness in the spreads. And as of right now, if you take a look at the landscape, particularly that delivery system, we're not quite there on corn. Beans, you're kind of on either side of it. It's ebbing and flowing on either side of what we call delivery, but the bean spread is reacting appropriately also, because we traded 39.5 inverse on May, July beans just late last week, and here we are today in the mid-20s. Right. So I think the market is sorting itself out. End of the day, it doesn't have to be right until the end of the month.
Okay, good stuff. Thank you very much. Brian, what are your thoughts on wheat here as we move forward? Hard road winter wheat is certainly getting a lot of attention. You saw the ratings yesterday, testing some of the lows that we've seen historically. So, any thoughts, comments in that regard?
Well, you used the key word there, Drew, historically, because we were watching history in the making now in terms of the spread between Kansas City wheat, KC wheat, if you will, HRW, and Chicago. Is a record high. It's nearly $2 a bushel basis the nearby futures. The market is looking at a second consecutive year of shortfall, unfortunately, unless the weather changes very quickly out in Kansas, Oklahoma, Texas, Colorado, just a severe drought in that area. On the other hand, Drew, stellar potential, I would say, far long way to go, but stellar potential for soft red winter in the Midwest, and I'd include the Southeast in that at this point too, down in North Carolina, for example. So in terms of what it means, I think we're going to see that spread potentially continue to firm here until something changes, because we've got unprecedented back-to-back droughts out in the West, and now we've got potential for not only an increase in acreage of soft wheat, but a whopper of a crop. Right. So I guess I would just say that right now the competition export-wise is going to remain strong. Wheat is searching for demand on the feed side. I think the key thing is how much wheat we can feed this summer, Drew. Soft red into the Southeast, for example, and maybe shift some of the soft red wheat from the Midwest a bit west. It might migrate its way west this year, which would be not usual, I'll put it that way, Drew. Right. And Michael could expand on that a bit more than I could, but that's something to keep an eye on. But I'd wrap up, Drew, with just some thoughts briefly on the producer side, looking at some tremendous opportunities still for new crop, corn and beans, looking at defending your balance sheet, looking at utilizing the tools available to you, whether it's options, combination of forward sales, short-dated options, whatever the case may be, defend that balance sheet, because I think Michael made a great point. This planting season is going to get off to a quick start here in the Midwest. And I'd remind our viewers again, South America, despite the shortfall in Argentina, has record crops in Brazil potentially.
Very good point. Thank you, Brian. Michael, last question for you. Looks like we're caught up with the commitment of traders report that the CFTC puts out. Does anything look out of balance, or are there any outliers out there that we should pay special attention to?
I don't know if anything looks out of balance. We did see a pretty healthy flip last week as far as from a short covering standpoint. I think it was the largest round of short covering week on week for corn and beans since September of 2020. Might need to be fact checked on that, but I think that's the case. But it was a pretty healthy move. So funds were running around 100,000 long on beans. I think this last week's number was 146. So call it ballpark 46,000 contract increase to the net long from a managed money standpoint. Corn actually flipped from a short to a long. So a little more friendly on corn, healthy short covering, but also now getting a bit of a gross long that we're building. So they were negative 13,000 contracts. I believe they were 21,000 positive in the last release. So outside of that, there's not a whole lot. Like, that doesn't feel out of balance necessarily to me personally. Sure. Kind of given the landscape. They've been running a pretty aggressive net wheat short for a while. Mm-hmm. I believe they reduced that a little bit. Same thing on soybean oil, reduced a minimal net short, and then cut into a net long on meal a little bit. So compressing the product side on beans, but it doesn't feel way out of balance, but it is worth paying attention to because it was a pretty healthy increase as far as net gain. Sure. Last week.
Sure. So. Okay. Good. Well, thank you both for your time today, and we thank you for watching. If you have any questions, please reach out, and we'll see you here again next month for the May USDA WASDE report. Thank you.